Larry Glazer joining us, Jeremy Kaplan, Digital Trends Editor-in-Chief, and Cheryl Casoni. Now, Cheryl, the company itself, and you're by the company now, they have been saying that this is based on, and the sensation around is feeding a trend where younger people, it's not the Facebook crowd, this is the new young hip crowd. They're using this technology, they're using these spectacles, and it is well worth all the fuss it's getting. That's basically their argument, right?
Well, their argument is that they're a camera company, and that's one of the things that they announced in the fall that frankly took a lot of investors by surprise. We're not an app, we're a camera company. Now they want to get into drones. They've invested a lot of capital into those spectacles that Nicole was showing you. And while all of that is fun and exciting and everything, let's just remember here, they lost $515 million last year. Where I'm at here in Venice Beach, California, a lot of security. If you look at the prospectus, Evan Spiegel alone, our 26-year-old co-founder, who is now a multi-billionaire several times over, $860,000 are being spent a year, nearly $1 million on just his personal security. And as the books of the company open up, and we care about the financials, especially if you're going to own the stock, Neil, we need to know what they're making, what they're losing. Right now, they're losing a lot, and the culture here very secretive, very elusive. They didn't even invite me, to come in and use the bathroom. I mean, I'm just saying that it's a very secretive company.
Yeah,
we've been here for 2 days.
I get a feeling of that.
On.
Larry Glazer, when Cheryl touched on this idea that they're a camera company, and I don't know if I'd be jumping for that comparison because the market record on camera companies is not great. For example, Eastman Kodak comes to mind. But I understand what they're trying to get at here. Don't associate us as sort of just this fly-by-night internet or social media operation, but to fall back on what is essentially a high-tech hardware item. I don't know if that's going to sell you more buyers, so to speak. What do you think?
Listen, last time I checked, I wasn't interested in investing in Kodak, so if it's a camera company, I'd be a little bit concerned. But look, Neil, when the market's had the kind of run like we've seen, adding $3+ trillion of market cap, it's to be expected. Optimism is off the charts, and the skeptics come out of the woodwork on a deal like this. And what's interesting is everyone wants to equate this with a sign of a top of the market, right? One of those bellwether moments. And it's a really expensive company. It's 20+ times sales, twice the valuation of Facebook. It's got, $30 billion market cap. It's crazy from that perspective. But I think it's not a sign of any indication of fraud in the Trump trade. If anything, this has nothing to do with the Trump trade. The Trump trade is about the old economy. It's about industrials. It's about financials. It's about real economy.
I buy that, Larry,
but
I will say that the Trump trade and the market run up, and I mean, that has been the wind at the back of this company and these young guys who founded it. Jeremy, the one thing I'm getting from this, Jeremy Kaplan, Digital Trends, is how the founders, young as they are, tried to do their level best to avoid what happened to Facebook, a strong launch, then a tumult, and then people bought in later, obviously, and Facebook was off to the races. But a quarter of this so-called float, or the shares made available to the public, is kind of locked up for a year, including for the founders themselves, if I understand this correctly. So they can't go out and all of a sudden cash in and then cash out, right? So will that make a difference and prevent potentially another initial offering like Facebook? I stress Facebook did bounce back from a rocky beginning, but what do you make of that?
So Facebook is a fascinating comparison. I'm glad you brought it up. Let's talk about these two companies from a technology perspective. That's what I come at. You guys can debate the financial merits of this IPO. From a technology perspective, Snapchat is a really interesting company because there's nothing there. They don't have any special proprietary something that other people can't replicate, which is why we see a company like Facebook, which owns Instagram, making the exact same moves that Snapchat has been making. And frankly, Instagram is just as successful, if not more successful. So what are you buying when you're getting this IPO? You're getting the technology of this company, the smarts of this company. And honestly, I'm not super convinced that there's a lot behind it. So it's got to me, that would be something that people should look at when they're looking at investing in this company. What are you actually getting here?
All right, Larry, to that point, and you mentioned the sort of the Trump trade effect that's going on and the enormous run-ups we've seen and the quick sprint over 21,000 yesterday, and the markets are surprisingly holding their own, that in such an environment, and froth is always, I understand, in the eye of the beholder, but things like this are part of the environment that you get in a market run-up. I'm not saying that means that the market run-up isn't justified or that it can still go further, but you see a lot of hysteria around a single issue or much attention to a single theme that reverses itself. What do you think?
No, I think, look, it does speak to the fact that there's so much money tied up in these pre-IPO consumer technology names that are just struggling to go public, and they don't make money, so investors aren't that excited about buying them. And a lot of that money went into these companies because interest rates were so low. So you could argue the reason that money's there is because of Fed policy. If we had a more normalized economy, maybe like we're seeing today, where confidence, people are investing in business, plants and equipment, that type of economy would have prevented those excess dollars going into private deals in companies that will never make money. So I think the interesting thing is investors should be more concerned about things like the $20 trillion debt that could weigh on the Trump trade, or perhaps European elections, than a one-off mega cap unprofitable company that could be a sign of froth in the consumer technology space, but says nothing about the real economy.
Cheryl, if you're still with me out there in Venice Beach, I had heard, I read a story, and maybe I actually heard it from you, so I apologize, that for a lot of the workers who could participate in this, they too have to hang on to the stock for at least a year, but the company is providing loans based on the value of the stock if they want. In other words, an upfront money to reflect whatever they got today, and to keep them happy and obviously to keep them there at the company. Is there any truth to that?
Yeah, I've heard that as well, but you are correct in that a quarter of the shares are locked up. Now, we should say that in the filing, we found out that Evan Spiegel and Bobby Murphy are planning to sell a few million shares each. They were each selling 16 million shares, but that was in the IPO prospectus. So that netted them each $272 million. But yeah, a quarter of the stock is locked up. The lockup period is 1 year. That is to encourage, obviously, you don't want volatility. They don't want volatility in the stock. And to kind of stop that sell. And we got that, Nicole mentioned Pivotal Research, the $10 call. I actually ran into a trader from the New York Stock Exchange. Believe it or not, he's here in Venice with his son. He was on vacation. He came by and he goes, there's going to be there's a lot of interest in this, but a lot of it is flipping interest in the Snap stock itself from his colleagues. And he was on the phone to New York with me listening in, frankly, yesterday to give me some idea of what to expect today. And then I also want to touch on something that Lance mentioned with the technology and how these IPOs debut. I was looking at the day that Facebook opened back in 2012. It gained 0.61% for that day. But guess what Twitter did the day that it IPO'd? It gained 72% that day.
Right.
So you can't gauge what this company is going to do tomorrow based on what it is today. It's fun. It's exciting. The spectacles are cute. People are walking around in them here in Venice Beach. I love that. But at the same time, you got to question the longer-term strategy here if you're going to try and get into this company.
Yeah, you'll never call the exact moment, like you say, but you'd like to see how it sorts out beyond the euphoria, because it's going to be hard to get shares anyway, even in the aftermarket for the time being. All right, Cheryl, thank you very much. Larry, I want to thank you. Jeremy, I want to thank you as well.